Does this sound like you? You bought into that IPO they told you was a good investment, and now you're down 20, 30, maybe even 40%. You try to buy the stocks they talk about in groups or on social media.
You've even taken a chance on the ones your advisor sends you via email.
But after 2 years, that IPO, that stock is still down.
There's a clear difference between investing and making a good investment decision. So if you're stuck, what you need to do is learn how to invest the right way.
In our Learn Level 2 program, we teach you how to build a $1 million investment portfolio. To make money investing, you need to know which stocks are right for your investment strategy, know when is the right time to buy and sell, and know how to build the right portfolio for your investment style. This program will help you invest meaningfully while making money. When you sign up, you'll get monthly guidance on how to invest and make money while doing it. You'll have a community of investors on the same journey as you to support you, and you'll have resources to help you stay on track. Join our 2026 cohort so you can get back on track with your financial goals.
All right, welcome to another Stocks to Watch episode, everyone. This is our final one for 2025. So I'm gonna go through today. I'm gonna share three of my stocks to watch for 2026. I have a special guest that I'll bring on in a minute. And so the premise behind this video is that we talk about pretty much what's going on in the country, in the economy, and the market. That frames what we share as our stocks to watch. No, this is not stocks that we necessarily have in our portfolio. This is not stocks that we own or anything like that, or maybe even plan to own. It's more about us watching them to see either something that may be a catalyst for the stock, or something that may cause some movement or some growth or even decline, right? Stocks to watch is actually not just for stocks that we expect to go up. Maybe we expect a stock to take a turn for the worst. I have one in mind when I say that. Maybe I'll share it tonight. So the premise here is that this is really meant to be a discussion to help you to understand how we think about stocks. So that's the premise of the episode. If you're brand new to LGI, welcome. We have, content on this channel to help you to learn how to invest. This is our level 2 program in the introduction. I'll talk more about that a little later. So, Lovin says this feel like we just did a 2025 stocks to watch. I mean, the year started out slow and then went by a little fast. But yeah, so I lost my train of thought there, but please join me in welcoming our special guest. It's a familiar guest, Dr. Verway. Is it?
Really?
I don't remember. Not Dr.
No.
Okay.
No, it's not Dr.
I thought you were working on like your PhD or something like that, sir.
Funnily enough, I had that question tonight when I was filling out a document of what are the titles that I would love to have in the future. And I didn't choose doctor though. I just chose, I'm already CEO. I'm already director. I chose chairman. And I chose, there's one more that I chose, the CEO, chairman, director. Can't remember the last one. There was something else.
So you have a company that you serve on the board on? You said you're a director?
As in, I am the managing director of my. No, did we say this last time? The last one I was here. So for the viewers that know, I am now running my own consultancy. CNV Consulting is the name of the company. So I am the managing director of it.
Okay. All right, no problem. I think everybody knows I work at Sagicor as coach, so we'll talk about that another time, right? So we're gonna jump right into the episode, Chike. We usually, just for everybody's benefit, again at the start, we'll talk about what goes into our process for picking stocks. That's all we're talking about here, right? So I'll allow Chike to share his process. I'll share mine. And then we both will share 3 stocks. Chike will go first. I go right after for each. And then each person will share their reason why. and then the other person may chime in or may not, right? So yeah, let's jump into that. So Chike, how do you go about adding stocks to your portfolio?
So for me, I like to do, as for those who don't remember or don't know, I'm heavily on the quantitative side. So I like numbers. I really do, regardless of how nice talking about a company is and management. I like to actually see numbers. So when there are good things that are going on in terms of revenue, in terms of net income at the end of the day, and specifically in terms of cash position, cash flow, retained earnings, etc. Those are the things I like to look on specifically. So I'm always going to gravitate to starting my process by identifying companies that have growing revenue, or they may be in a distressed manner somewhere along the way. Maybe they've fallen out of favor because something has happened in management. But the key metrics about the particular company in terms of its year-on-year revenue or year-to-date net income, quarters, etc. overall, is good. It's just having a bump in the road. So that's where I start from. Thereafter, I will then put the other parts together, which are the quality sides of it. So management, how they're going to improve. If there was a bump in the road, what was the improvement by management being either done or being done? And how long is that trajectory going to take by their assumption? And then just watch. So,
All right,
yeah.
all right. So for me, I'd say that I look at, I guess you can call it qualitative, because I'm looking at the business first. I'm looking at, so I look at three categories of stocks, or my brain works to identify stocks in one of three ways. And this is one of the things we teach in our level 2 program. So I look at three categories. I look at income stocks, those are stocks that pay me dividend. I look at growth stocks. Those are stocks that have the opportunity to grow at an above average rate. And then you have value stocks. Those are the ones that are either undervalued by some metric, whether PE or book value or something else, right? So those are my three categories. I look for different stocks in different seasons. So I'd start there first. I'm looking at business model first. If the stock has the ability to meet the goal that I'm looking for. So for example, if I'm looking for income, I'm actually looking for some very specific things on the income side. Like for example, minimum dividend yield. If it's a growth stock, then I'm looking just at the P&L first. If it can't pass my kind of P&L assessment, then I don't go further. I'm not looking at balance sheet. I'm not looking at cash flow. It's just an initial assessment to see the growth potential of the company, right? Of course, there are things that fuel growth, right? So the state of the assets fuel growth, whether or not they have debt that will fuel growth, and things of that nature. How they manage your cash will fuel growth. But I'm looking at some key things on the P&L first. If I'm not interested after that, then it doesn't go any further. And then for value stocks, I'm really looking at the state of that business for long-term sustained growth potential. I have a handful of companies really on that list. That list has not changed in a long time. It hasn't changed in a couple of years. I think the value stocks that I'm interested in are still good right now. And so that's that, right? So that's it for me. It's a very simple process. It's one Renee and I have worked with since you and I did our initial learning, right? So after we did the JSE securities course, and then we did some other kind of studying, or kind of developed our own unique ways of looking at the market. It's just always worked for me, and so I have no reason to move away from it, right? So hopefully that helps somebody who's brand new and may not know how to look at the market. Now, you still have a lot more to learn, because even the process that I just shared and what you just shared, Chike, it's not
Overnight.
that simple to just say you can just, let me just copy that and make some money. It's not that easy, right? There are a lot of kind of foundational things you need to know. If I have a question, so I was actually talking with a client yesterday, one of my coaching clients who said they're always wondering how come I'm always on top of the news about a company, because I sent them an article that came out. They're like, I don't see what you see. How do you track the news so well? And I said, well, I have a process. I've built out a method of research where it should not take me more than 10 minutes to see anything that's relevant about a company that's in my portfolio. And I also try to track and have information on the companies that are in my client's portfolio. Not that I need to tell them when to buy or when to sell, because that's not what I do as a coach. But I try to be at least familiar with those companies so that I can help them, of course, go through that process of deciding for themselves. Because as a coach, I'm teaching them how it works. I'm teaching them how to make decisions, how to create their own kind of processes, etc. Right? So I still have to pretty much track everything that's on the market. Only two companies I don't look at, which we've discussed before, Carreras and SVL, for obvious reasons. Everything else is fair play for me, because I may need to know it at some point, right? So before we jump in, Chike, I wanted to ask everybody here, tell us what's your number one stock to watch for 2026, and let me frame this for you. This is a stock for you that you're thinking is gonna perform the best for you. Since you're only giving us one, give us your best one, not just the one you think is gonna go by the end of the year, but which one you think for 2026 is going to see the most growth throughout the year. Like it'll end the year significantly further than how it started, right? So that's, I want you to tell us your stock to watch, and I will actually go through them. I will try to do a video on the stock that appears the most, right? So 71 persons are on the stream now. Tell us your number one stocks to watch. Whichever one appears the most, I will do a video on that. All right, so that's the deal. We can get started now. All right, so Chike, you're first.
All right, so let's just first and foremost declare what this process was about. We have unfortunately had our catastrophic situation of Hurricane Melissa that happened on the 28th. And normally we would have had multiple picks had something like this event not happened. So let me say right off the bat that every stock that I pick here today was centered around the recovery process that is going to ramp up, or we suspect we would see ramping up next year, right? I actually tried to get one main market and two junior, but I am going to be corrected accordingly, because based on what I have here, I know one definitely is main market, my first one that I'm going to declare. And then the other ones, while Jeremy does his, I'm just going to confirm where they are going to be going accordingly. So my first stock that I picked, first company that I picked for 2026 is Carb Cement. Simply because, and we're going to go through this in a couple of stages. So let's do a recap of Carb Cement of itself. We've got their 2025 year recap and other disclaimer that I'm going to put out. Jeremy doesn't like this, but I'm sorry. Work smart and not harder. For those who know, this process used to take 5 hours just to do the research and then be pulling up and putting together all the charts and stuff like this. We have the beautiful inclusion now of artificial intelligence and large language models. And I am not doing any paid anything here. This is just my preference of the one I use the best because it has research backed behind it as its strong suit. So Perplexity, and I have the full suite of it to use. So what took me hours now takes me literally a couple of minutes, and then I just fine tune, go through, and identify. So back to Carib Cement. So we have our 2025 recap of them. With respect to how they were performing, it was pretty much a year marked by some transition for them. They had some costly plant maintenance in the early sections of the year, but they did have some revenue growth, about 7% in revenue growth. But then they had a net profit plunge, and that was like about 41% due to their one-off operational costs. Those who are following the company can definitely correct me accordingly. There was at the time some market sentiment that would have said that, the stock price would have faced its headwinds in Q2, Q3. And at the time we were looking at the stock price being during July, it would have been like $84, right? Based on how investors were accustomed to their normal high margins. They had a few things that had happened as well too. One of their key major events was their killing maintenance that had to happen. And that should have been positioning the plant for maximum efficiency just in time for Q4. And then the hurricane struck. So now, with stuff like that was done, the expectation for Carib Cement for me personally is a cement. They are the country's primary cement provider, manufacturer accordingly. So henceforth, all of the houses, the 156,000 homes of damage that now have to be rebuilt to new code, because it is the expectation that now that we've had a major category 5 hit us, decimate the West, unfortunately, there's going to be a new structure of how things are, how structures are built, how homes are rebuilt. Yeah, right? We saw what had happened, I'm sure, for those who do social media. What was the particular new homes done by the government and literally got ripped up like it was tissue paper. All of that is going to be redone. What do you need? Concrete. So henceforth, Carib Cement is the major player. You might have other players that might be included, but that would only be a case because they cannot supply it enough. But who is going to be the first go-to person when everything ramps up? The expectation would be Carib Cement. So for 2026, my outlook, we're going to go two ways. Let's go quantitative first. This is all speculation, by the way, right? In terms of how the research was done. Could be looking at a revenue growth of between 20 to 25% year on year, because they are the sole local cement manufacturer, right? And they have to satisfy the rebuilding of those homes and critical public infrastructure. So with that being said, bumper year could be a bumper year for them in that their margins will expand significantly as the plant runs at full capacity, and leveraging the 2025 upgrades that it did. So that's the quantitative side. For the qualitative side, again, the expectation is that Carib Cement is a first responder of the stock market, government infrastructure that is there, bridges, those projects of repair or rebuild of bridges, roads, along with the private residential rebuilding, should create a nice backlog of orders. And we would hope that it goes all the way into 2027. So, on the back of Hurricane Melissa's recovery, they have what would be seen as kind of a monopoly advantage. They are not a monopoly, but they are the only local producer. So they should have the lion's share of the immediate cement needs, right? Without having a lead time for imports. So by the time things get settled in terms of if the government can't wait on them, supply and demand dynamics take over naturally, right? So that brings to the second part of their supply chain dominance that they currently have. It should be easy for them to distribute, across the entire island, simply because, and to Westmoreland and St. Elizabeth specifically, just because they already have the distribution network that has been done. Funnily enough, too, I have driven around there so a couple of times, and there are trucks, bags and bags and bags. I'm seeing the trucks all the time. So that being said, Jermaine asked me to do something interesting, which I haven't done before, but this was nice to actually see. Jermaine, jump back in and tell me if you want me to give a price target assumption of what the system did. If not, I'm not going to give it, but I'm just going to give the.
So yeah, let's stay away from the price. I don't want to hear that we're framing anything or trying to plant any seeds or anything like that. But I did ask you to do another thing, which was the bear case, right?
Yeah. And the bull, well, there's a bear and bull case. There's a bear and bull case. So let's go with the bull case first. So our bull case, and we don't talk about the price.
You just gave the bull case, right? You just gave the bull case. Because that's
right. No, but summing it up for them, bull case is reconstruction demand would outstrip supply. So that should grant Carib Cement pricing power. The maintenance drag of 2025 that they had, that vanishes, and now should reveal, if it works out, pans out, they should have explosive earnings growth in Q1, Q2 of 2026. That's the bull case for them. The bear case for them will be, and JPS just asked us for 7% increase. So the bear case for them is an energy cost spike. So in the general sense, if global energy prices rise,
I'm seeing oh my gosh, John here asking, do you expect an increase in royalty fees by parent company? Very interesting kind of pebble in the analysis there, because that would certainly leave investors very, very tickled if that should be the case. That would almost undermine your entire bull case right there. If there's an announcement for that, if even a small minor increase of royalty, man, that would not go well.
We know for sure, based on what has happened in the past, and no names will be called, but one specific investor will be on a terrible rant.
One shareholder activist.
Yeah, man. You will be on one very terrible rant based on what would happen. But yes, that is actually a very important beer point. That if they decide, yes,
that was gonna, because it's almost like, hey, I see you're about to make more money. Let me just, let me
just scrape it off from the top before it gets to the bottom line where you can get your. Yeah, actually, and the truth be told, that is the problem from the time they did that was the problem I had with Carib, that it's not fair. I have to agree, it's not fair that they can extract.
Yeah, I think
at that level.
I think they should just take a dividend like everybody else. Like,
yeah, well, no. Unfortunately, they are the ones that are claiming that they're taking. We ain't taking no risk. We just putting up capital accordingly. They're the ones taking the risk. So, and it has been just to end on that. It has been a beautiful educational experience for me in learning where money is where revenue. Are the end result of revenue is extracted by primary stakeholders.
So important for me. That's why the P&L is so important for me.
Yeah.
Right. So I agree with you on this one. So I would say as well, I think not just the residential developments, but the commercial development. Hotels that may have been damaged that need to rebuild. I do think though that the rebuild won't be as accelerated as projected, but certainly enough to increase what they would have normally done. I think the Q4 that we're in is interesting for them, because I don't think necessarily heavy rebuilding has necessarily started yet, But this is a time when government does their like fixing of roads or different things for the holidays. This is where budgets are being prepared for next year. I was going to say to you when you mentioned the residential stuff that, I'm assuming that, well, not every Jamaican is building house with cement, but I'll go into that another time, because again, I don't want to necessarily seem like insensitive there or anything like that. But I do think across the board, your 20 to 25% estimation of revenue growth sounds realistic to me. Of course, watching for whether or not that royalty is levied. And if it's not, then I think that should definitely find its way to the bottom line. I do feel like they have at least one quarter every year where they just have to do something, right? Whether it be the hurricane season or their maintenance, whatever it is. But otherwise, from that, they should certainly end the year in a better place than when they started. All right, so I agree with that one, sir. I agree with that one. I'll give you that one. All right. So I wanted to start with, so I'll stay in the same domain as you are in terms of construction. This company is one that I've been sort of like, I don't even know how to feel about them anymore, but because I knew what year 3 were, I couldn't pick any of them because I wanted to give the audience six different companies here. But the one that I'm looking at here is, let me find it here, is Fosrich, right? Because yeah. So I know that was on your short list. I know.
Actually, fair disclaimer, yeah. Let's actually tell them that originally when I started, Fosrich did come up. So yeah, it actually did come up, and I was like, huh? But I had already made my picks in terms of, and I then went back and had my trusty LLM. I was like, why would you pick these and not pick these? And funnily enough, to be very honest, when it reviewed my picks, it went, these are much stronger based on XYZ. So that's why I ended up there.
Yeah, so Fosrich concerns me a little bit, even though I'm watching them, meaning I think that for some reason, right? So for example, the delayed, opening of that location is a concern for me. The one that was supposed to finish, I think, June of this year. Somebody just mentioned their debt. So it almost feels like one of those things where it's gonna be almost like against all odds, meaning because there are so many things that could potentially go wrong or not go right for them. Because you've seen it here. It's down 8%, but it actually feels worse than that year to date. We saw this big drop off here. It was $2.89 at August. I think that might have been the report, went all the way down to $2.06 and recovered slightly from that. I didn't check out that most recent report. I'm just doing it on the premise of what we're talking about here, that I do agree that so this is my thought process. I believe that there's going to be opportunities for companies that are on the fringes, right? So not the obvious ones, not the construction one, not maybe the hardware one, not maybe those kind of ones. Because of course, any building, any construction is going to need fixtures, it's going to need piping, it's going to need different things like that, right? So Kirk is mentioning here that the new hardware they acquired, is it damaged? I'm not sure. That may be interesting to find out. I know that they had some kind of partnership or company that they had in that area. It's actually an excellent question to find out. I don't know, right? I would probably look at, they had a report that came out November 10th. So I'd probably comb through that and say, I'm solely making this one. So remember, I framed it before that, for me, I start qualitative, right? So it's stock to watch for me. I'm first thinking of the opportunity that exists in the market for them. I'm thinking of the opportunities they have to either do, a partnership, whether it be, supplying certain companies or certain developments. Let's say that they enter into some agreement with the government to, be a part of. So let's say the government says, we're going to help to rebuild, X location with X amount of donations that we received. And then, Fosrich may be that, set partner to provide all the fixtures and all the things that you need to put in the home. Because they've been around long enough for me that they may have some relationships that they can leverage there. And so I'm hoping that they can, make those kind of things happen, because the things that they provide, they don't necessarily have a monopoly on anything, but they may have the scale, they may have the distribution to be able to facilitate the larger orders. And I know they have, yeah, go ahead, shoot.
And on that same note, so I want everybody to stick on that same what you just said in terms of hope of facilitating orders. Here's what was the original analysis that was picked up. So based on their 2024 audited results, they had flat revenue, right, which was around $3.68 billion versus in 2023, right? And they had pressure from high rates, they had supply chain challenges, and that was indicating a business that was already under strain going into 2025, right? So in the first half of 2025, then the company swings to a net loss of about 189 million versus a 78 million profit a year earlier. Then their gross profit fell 34%. Operating costs, it stayed elevated by about 9 million into 2025, and the net loss of itself widened to roughly about $434 million, reversing the prior year's profit completely.
Yeah.
Then all of that taken into account now, that moves them into even more deeper losses, falling gross margins, and basically continued cost pressure materially. And by that extension, when I asked about them the first time, because immediately I had not looked on Fosrich for the year, I just knew of the two things, but I knew they weren't doing good. Immediately when it did that, it came back and said, yeah, based on that stuff, it weakens their investment case, because even though the sector is thematically aligned with grid repair, we know Fosrich. Yeah. How much things were they supposed to do? They were supposed to do lighting for the north, for the east-west highway from however long, all of that kind of stuff. Solar, a lot of things that were supposed to be done have never properly materialized accordingly. With that being said, then, right, their trajectory in terms of their financial trajectory has already significant downside and execution risk. So it really is a hope that they can pull something out of the hat and be favored for 2026 cap gains positioning.
So I'm reading their outlook in their last report. It says construction of their superstore at 76 Malines Road is advanced, with a completion date now projected to be Q4 2025.
Done.
Their budgeted activities for 2025 have been significantly affected by this delay. They have halted their plans to enter the US markets until further notice. They have continued to implement specific strategies as outlined in their strategic plan, with a view of making the group more vertically integrated and returning the company to profitability. We're cognizant that despite the challenges ahead, we have the right talents and leadership to deliver on our plans for the ensuing period, right? So I do think, so here's the thing, I'm relying on a company being able to figure it out, right? So the beauty about a company that is doing poorly, if they right the ship, fix some things, then they're able to recover. Once they recover, investors will respond favorably. Because remember, we're talking about growth, right? So based on where they are now, I think there's opportunity to grow because of how far they have fallen.
Hold on. hold on. You and I have always had this discussion.
Mhm.
Everything can lie, numbers don't lie, unless numbers were cooked.
But numbers are
Numbers don't lie.
historical, sir. Numbers are historical. Numbers don't
Hold
tell
on.
you future potential.
All right. So we run businesses. We both run businesses. We both know cash flow is a lifeblood. Tell me
Mm.
what is the current amount of cash that they actually have.
Let me check
Tell
that
us.
out.
Tell us.
Cash. I'm seeing 53 million cash.
How much was there last year? The year before?
105 million.
All right. So so they basically lost half,
They
right?
spent half. They invested half, sir. I mean, I don't know, but yeah, again, so Chike, this is why again you mentioned it, right? We always kind of differ in this because remember the financials would have captured the ending of a quarter that has passed. A lot has transpired. This report was before Melissa. This report ended September. They
Mm-hmm.
the trajectory, the focus, the outlook of the company could have changed since then,
All
right?
right.
The priorities of the company could have changed. The focus of the team and what they double down on, right? Because maybe now all of those other initiatives and projects don't seem worth it. Maybe we focus our efforts on construction material in developing those relationships, in sort of leveraging the relationships that they have to try to focus on being a part of that rebuilding process. I don't know. I'm just saying, right? That's how I'd be thinking if I own that company, right?
Mm.
So I see Kevin saying here that Fosterich may grow in the future, but the stock price is already highly elevated. So I guess Kevin is saying, even if they right the ship, they're already overpriced. That's what Kevin is saying here. Kirk says he thinks a bull market is coming. I'll touch on that later. I'm saving that comment. Fosterich is a long-term game, may not be the stock to watch for 2026. What do you say? 2036 stock to watch? I don't know.
That would really be, if it's 2036, you might as well put them out to pasture. No offense, Stockbridge.
Okay.
If everybody from them is listening.
Good. All right. Jump to the next one.
All right. So next pick for me was 1 second. Go back up my document. All right. So my next pick is favorite from earlier in the year. Come back again, even more so now. Kingston Wharves.
Oh,
Um.
okay.
So let's run back through Kingston Wharves. 2025 for them was all about growth. They had 9-month revenue gains of 20%, 9.41 billion. Q2 earnings that had jumped up to like about 37%. And the company had successfully pivoted towards their logistics services. I think we spoke about this, and I did mention this, that this was huge, in my opinion, for them in terms of being able to, have more than one avenue. So they basically pivoted to the logistics services to include that and reduce their reliance on their pure stevedoring that was going on. So pure just bringing in and getting off goods, container ships, etc. Right? Their part of first part of 2025, the market sentiment was highly favorable for them. Now we know we had those things that had happened with I forgot the primary company that they had done. So, but they had basically demonstrated their immunity to the broader economic sluggishness that was going on. So for them, you had the key investment in their terminal infrastructure, the logistics centers, and that now is going to be, based on how it's looking, should be a critical asset going forward for managing relief aid that is coming through the ports, right? So for 2026's outlook in terms of quantitative versus qualitative, on the quantitative side, this has a projection, and again, projection, estimation. This is not a number that you can watch for. to breach about 14 billion in 2026. And that is due to the influx of estimated reconstruction materials that would eventually have to pass through there. So lumber, steel, generators, all that stuff that will be coming through the ports, etc. Whenever humanitarian aid does shift to coming via ship accordingly, you know, all of that has to drive through the terminals accordingly. So it just leaves that if the government does decide to work with them based on the fact that they have key logistics ability in place, key processes in place in terms of their container management, the ability to offload ships. They just got new, was it them that just got new what do you call those things again? The things that lift the containers off the ship. So the bigger ships they can now take on. They got like I think it's one or two new machines of itself that does that. So all of that stuff, larger ships can come down now. So on the qualitative side, we have them as a primary key for the recovery effort. So as we move away from, let's not look on like manufacturing, which would have production caps. Kingston Wharves is logistics primarily. They can scale things rapidly, they can handle the increase, and then they can push to get revenue from storage fees. So put it this way, if your stuff coming through Kingston Wharves, do not have it be delayed or unclaimed for a long time because you're going to have a bunch of high storage fees accordingly to pay. So yeah, with them, they're my pick in terms of that. Based on Hurricane Melissa's recovery strength, is we should see, the having to bring through all of that bulk cargo. So all of the zinc, the lumber, the steel that needs to pass through there, and if they become a aid hub, if they get an aid hub status, this is an assumption, then you are looking at things being staged through by international organizations. So think World Bank, think IDB, etc. Things that are purchased when they start to dole out that aid. It is estimated that today 8.8 billion, that relief package that has to happen. If it has to go through, going through Kingston Wharves, that's a big bellwether moment for them, big boon for them. So sum it up, bull case for them is them taking a nice chunk out of the 8.8 reconstruction fund inflow by leveraging their logistics services on the margins, and also just their ability to handle cargo efficiently. Now, the bear case on that side would be, no, I don't like this one because I don't see how this makes sense, but it said it. So we haven't heard any damage to their underwater berth, to their berths based on the passage of the storm, right? In terms of similar to what happened to Jamalco in Beryl.
I think I saw any report of damage.
Right.
Yeah.
So once they don't have that, that's not a bear case for me. Another option, another assumption bear case would be operational capacity being capped, which would force ships to divert to Montego Bay. Let's see how that would work out. For me personally, a bear case.
They just took an ownership stake in.
Exactly. So henceforth, it still is a win, right? The bear case to me, which I can see, is government finding another way of deciding they're bringing in the aid. But there's only two ways aid coming in this place: is either by ship or by air. And air, while it's fast, cannot carry in no kind of way the amount, the volume that containers hold. So that's it for me on Kingston Wharves.
Okay, I see you. So Kingston Wharves, full disclosure, is one of those stocks. I did a video a couple months ago that I said 3 stocks that I think are likely to be the next Trans Jamaica. If you did not check out that video, be sure to do it. I mentioned 3 stocks on that video: Kingston Wharves, Cement, and NCB Financial Group, right? So I'm a fan of Kingston Wharves. I don't have much to say there. I think that it's one of those companies though that investors, younger investors, newer investors, don't seem to be a fan of, meaning the volumes are typically on the lower side. That's my only concern about a company like this. You have some days, let me share my screen here. You have some days where your trading is, a few thousand shares, right? In some cases, less than 1,000, right? So that's my only issue with it. The liquidity, they have 1.4 billion shares though, so not liquidity in the sense that they don't have enough shares, but liquidity in the sense that it doesn't always trade a certain volume. But I mean, that's not something to be overly concerned about, depending on what you're buying it for. I see somebody saying the price is too high. I mean, price is relative.
Price
Price
is
being
relative.
relative. Yeah. I mean, I don't think the price is high. I think it's more one of those companies that aren't. I find it's more the persons who've been investing a certain time. Because to me, this is my theory that I had a few years ago, and you can let me know what you think about this, GK. I think that the companies that you focus on as an investor are the companies that listed around the time you started investing and after. So, for example, I don't necessarily think about stocks that, as a new investor. No, as I said, I look at all the companies because I try to look at the whole market. But a new investor may not look at a company like Kingston Wharves because they may not have
Legacy.
heard about it. Yeah, they may not have heard
Yeah,
about it.
legacy.
It's been there for years. Jado makes a good point here. Billions in cash, but dividends low. I think I also had an issue with that as well. You know that I look out for dividends.
Yeah, the dividend yield at that current price for the last payment is extremely low. It's not even 1%. So
Yeah. But Jado, I will say I thought that they were investing in infrastructure and the dividend could actually find its way back up to a more respectable place. Let me see if they have paid higher dividends in the past. No, their dividend has actually always been
it's always been sense.
consistent. Yeah, always been consistent.
Sense.
So let's see. But I mean, I don't necessarily have an issue with the pick. I like the company long term. So I won't. I don't have anything to say about that pick. All right, I'll work with that. Let me jump into my next one. Let me see if there anybody else who said anything about Kingston Wharves. Jamaica Politics TV says the government is pushing for container homes. Initially, I have a thought on the container homes. I don't think it's a good idea. I don't think that, unless you can tell me there's a way to
Long term.
secure those to the ground properly. Because in my mind, if you have heavy winds, isn't the container home going to lift up and go? I mean, I don't know how you normally secure a container, but I don't know if you maybe strap it down or something. I don't know.
No, it's supposed to have concrete. It's supposed to have a concrete base.
Concrete base.
Yeah.
Okay, so I mean, I don't know. Maybe I need to watch one of Julie Mango's video about construction to see if she mentions that. But that was my concern about the container home. So somebody says here it can be secured to concrete. Okay, cool. Right. So I just want to be sure, because I see a lot of kind of talk about what the government should do and the type of homes we should do. I see a lot of persons kind of rushing to rebuild, which of course you should. I mean, persons are without homes. That's a priority, right? You need shelter, you need security, etc. And I do think that a lot of people will build the best way they can with the resources that they have. Because I guess the idea is, I mean, statistically, you're not expecting another Category 5 for a while, if any. For the
We pray.
for yes, of course, right? So I mean, because yeah, I need to have another episode about that. Jason is saying, I think they can be bolted down to a concrete base.
Yeah, that's what it is. They normally drive
All of
rivets
us
down into.
worried about the heat. I mean, concrete, not cool.
Well, the content, it's true. Container homes automatically are hot boxes, so you better have your AC up.
Yeah. And then Jamaica Politics says the price of a stock is relative to a buy. I mean, somebody said it, right? People are buying NCB at $200. So the price isn't the issue. Because I guarantee you, if you hear in some group that Kingston Wharves halted up 2 days in a row, you have those who will chase, who will find that stock and start buying it, right? So I don't think price is an issue. I think it's other things that I won't get into right now. All right. Let me take well, I figure you're probably gonna go about 90 minutes. Chike, you good with that?
Yeah.
Okay.
Good.
All right. So I'm gonna take a small break and then we come back. All right.
You love God, you give, you work hard. But deep down, you know your finances don't reflect the level of blessing you believe you should be walking in. You've read the verses about abundance and stewardship, but somehow peace about money still feels out of reach. What if the missing piece is not more effort, but a deeper understanding of what God actually says about money? We've prayerfully created a program just for you. Financial Freedom in the Kingdom, a 9-week group coaching experience designed to transform your financial health through biblical truth. You'll learn a biblical money mindset, stewardship 101, budgeting and debt management, saving, investing, and the true meaning of financial freedom. Through video lessons, a powerful workbook, and an accountability group, you'll not only gain financial clarity, you'll also renew your confidence in God's plan for your money and your life. Join the waitlist today at learngrowinvestclub.com to be the first in line for our next cohort. It's time to align your faith and your finances and step into true financial freedom.
All right. So just some housekeeping matters here. I want to thank everybody who is here for the stream live. I appreciate you. Be sure to take a minute to like the video. I'm also going to ask you a favor to share this video with one person who does not invest and you've been talking to them about investing and you want them to start, right? So we have a free course, completely free, that helps you to learn how to invest. So I want all 110 persons here to help me find 100 persons who we can send our Learn Level 1 course to. The link is in the description of this video. Send it to them. It'll take them about 90 minutes to do it. They can learn how to invest, learn about the asset classes, learn how to assess their finances, and just start getting that process of investing. We don't need to promise them any get rich quick or they're gonna make X% before next year or anything like that. Just introduce them to it, have them go through it at their own pace, get them started, right? Because what we're trying to do is reach 10,000 persons with this free course. It's our way of giving back and adding to the space. We want to see more investors in the space. We want to see existing investors become more mature. We want persons to have more discussions like this. We want to see more channels popping up like this, right? So we want to see a higher level of discussion overall in the space. And this is our way to do that. We want to help people to get started completely for free. So check out that level 1 course in the description. Share this video with at least one person. That's my only ask of you for this holiday season. Share it with at least one person who can watch the video, learn how to invest, and of course, they're welcome to stay a part of our level 1 community. We'll be having regular Q&As starting in January for those who are doing the course, answering questions, helping them to do things like open brokerage accounts and things like that. We're going to spend a heavy focus next year to help people start investing, but not just start, because a lot of people, I think, also open accounts and don't use them. Like you buy that stock and it's just sitting there. And that's why we want to teach people how the market works. So if we do that, then we believe more persons will actively invest. The more activity we have, the more it benefits everybody. All right. So that was my little blurb there. Thank you for listening. We're going to get back to the regularly scheduled program here. All right. So, TK, welcome back. It's my turn, right?
Yeah.
All right. So the next one for me is, and I must give a disclaimer. This is a company that we work with. We provide investor relations support for this company. Yeah. So the company is Image Plus Consultants Limited. So they did an acquisition. So they IPO'd a couple of years ago. They are down, I think maybe 50% or more from IPO price. I think that with the building of their upcoming location, I think it's on Musgrave. The completion of that, they did the Woman's Place acquisition earlier in the year. There were talks of another acquisition, I believe, on one in one of the earnings calls that I figure we'll hear about sometime in the new year. I think once they finish the building of the new location, of course, costs will go down, and then of course they'll be able to, extract more profitability out of the company. And I think they are positioned still to benefit from some consolidation in their market. I think they are positioned better than the other company that's in their same industry in the market. Nothing against that company, but I think, even if there were some sort of, I think the more they consolidate, the bigger they'll become. The bigger they become, the more profitable they'll be. And I do think that there are opportunities for them. I think that that's one of those companies that if they can find the right location to expand, especially based on how the island is set up. I know their Ocherius location, I think, has been picking up momentum and doing well. And when I think back to their IPO prospectus, they had mentioned some plans to expand in certain areas that I think they're still kind of building out, right? So I know they added mammograms, within the last year. And it's a company that personally I've had to do, in the most recent years, I've had to do a couple of scans, right? More scans than I've ever done in the previous 30 years of my life. The service is excellent. So I am a customer. And it's a company that I think is planned to do well and be around for a while. I think so I see the comment here from Sean. I do think it's one of those companies that doesn't get the right, I wouldn't say the word attention, because I think their IPO did well, if I remember correctly. I think it's just a timing thing for them, because I think if they listed 5 years before, I don't think would feel the same way about it. So I don't agree that they only look good on paper, Sean. I think it's a well-run company. I think that the company is positioned to grow. It's more a timing issue, right? So they've invested strategically in that new location. I think it makes sense. And I think once they're able to have a few, sorry, if you remember when RPL was investing in that new gas station, the numbers weren't necessarily pretty until that gas station was finished. Look how they started the year, all right? So that's what I'd say here. I did say I would have a bear case as well. I think more, reach might be an issue, just location based on where their clients may be. So I'm looking for a couple of things, right? Revenue growth, profitability growth. Mentioned the joint venture before. I think that bodes well for them. I don't think they should prioritize dividends. I think they should cover expenses and then maybe think about a dividend in a year or two, but they do pay a dividend occasionally now. So that'd be it for me, right? So I don't know if you have any thoughts on that, sir.
Yes, I do. So we're gonna give you the AI pull down of
Sir,
what
I
it
don't, I
has
don't want
done.
to hear
Yeah.
from AI. I want to hear from you, sir.
Yeah,
I want to
yeah,
hear
yeah.
from
Well,
you.
I genuinely don't know them, but
Okay.
this is I now know them because now
Okay.
you're gonna confirm what has been said here, right? So here is your bull case that you talked about. So their acquisitions. Let's start with that. Women's place.
Yep.
Higher revenue, better mix of modalities, stronger brand in women's imaging. And the risk level that was assigned to it is about medium integration risk, right? Then we have the next driver, bull again, expansion and new modalities. You have a higher scan count, better utilization of their fixed assets, and stronger margins. Now, let me also let everyone know that this is not just being pulled, this like being said like this. The backing behind this information is the Jamaica Observer. So it's actually scanned through, picked up what it has found, and is trying to identify what the cases would be. So all three of these bull drivers come from the Jamaica Observer. So the last one, sorry, so let's finish with the expansion and new modalities. So that risk level is an execution and demand risk, which is good in terms of that risk level. And then the last one that Jeremy did speak about in terms of expecting revenues to could improve, etc. Improve cash flow and cost control. So they have more room for capex. And unfortunately, as you said, you don't think they should pay a dividend, but more room for capex and potential dividends supporting their valuation. And that, in terms of their risk level, depends on their sustained discipline, right? So now, that being said, the bear case for them is two things. The integration of the acquisitions is slower or more costly than expected, while their competition that you just won't mention, we won't mention, sorry, but we all know about intensifies, and the public referrals remain pressured, capping their volume growth and squeezing their margins. And the second part, we just putting out what was said in terms of an analysis. The second part is with the earnings growth being underwhelming, the shares remain illiquid, sentiment stays weak, and after the recent 1 year price drop and the high teens of 20s PE of itself, it puts further pressure on the share price. So overall, in summary, bear case is this: public referral volumes stay weak. That leads to flat or declining revenue, limiting operating leverage. And probability about that on a qualitative side, moderate thought process is what it said. Next one, cost inflation, capex overrun. You have a margin compression, slow EPS growth, higher leverage, and that has a probability of moderate to high. And then the last one, valuation derating and low liquidity. Prolonged shared underperformance despite stable operations has a probability of medium. So with that being said, for 2026, the LLM says that their setup is cautious positive. The operational upside exists from acquisitions and expansion, but the investment case depends heavily on their execution and earnings growth catching up with their valuation. So
I
for your
agree.
investor here,
I
you
agree
agree
with
or you
Orville here. I agree with Orville. You're going to be
okay?
intoxicated with that case of beer, right? That's what I'll say. So let me tell you why. The issues that they have. So I'm looking at their earnings here. They've done the first 2 years of listing. They did well over earnings here, showing almost 200 million. If I'm seeing this correctly, let me share my screen. I'm hoping that this information is correct, JC, because I don't want anybody to message me saying that's not what they made. But for this year, I know they had some machine downtime that impacted their numbers. I think that's what led to this loss here. But they've done what they need to do. It's par for the course, right? Every business has some risk, some potential for downtime, that kind of thing, right? If a regular e-commerce store would have like a potential for the card machine not working or whatever, right? So their machine was down. It was a big blow to them. They've sorted those issues. I don't think they should be compared to their competitor in this case. The competitor, I mean, unless something has changed significantly for them, they have not shown that they can kind of, I think, compete, right? To me, they're not on the same level currently. So I don't know what it is. I haven't done. I did a video a long time, a versus series between Apex and Elite. I haven't looked at that in a while, but I remember Elite just seemed to could not get past a certain point. So yeah, right. And I see Sean agreeing with me that it might be a timing issue as well. That's what I think, because I think if all things go a few years back and the same company would have listed, they would have done better, right? So but I think the fact that you're not necessarily familiar with the company, I give you some leeway there. I will say though, guys, I just checked, there are 111 persons here. We have 30 likes. Guys, please take a minute, like the video, especially if you've been here from the start. If you're enjoying the discussion, which I saw somebody say that it's been a good discussion so far, just like the video. It's completely free to like the video. Like the video and help us out in terms of the channel. All right. Continue, sir. I agree, NB Lee. We are looking at the present going forward, which is why I think I think the future looks brighter than the past for them for sure. So yeah.
Well, we have this to reference to, so we'll see where it goes in 2026 as it starts for them for sure.
Yep.
So, all right. So that brings
what your third is going to be, but I'll let you do the honors.
So for those who are in the group, in the general Learn, Go, Invest group, on the GSE side, I had mentioned this at the start. We had rousing discussion about this, and for me, again, sticking on the hurricane recovery team, this is my third, and it is Atlantic Hardware and Plumbing. So we have two companies in this mix. Everybody would know we have Lumber Depot, and next one on this was Atlantic Hardware and Plumbing. They had their IPO being done. So let's do the recap for them for 2025. The IPO they were listed in April of itself and came out at 1, stock went, and the price went down to 90 cents, right? But then they had a massive reversal and the price started to surge, went up to $1.45. And in the LGI group, one of the things I said without question was, I expect companies like them to have the same pressure. So let's take it back to Carib Cement. It's the same thought process I have. Supply and demand dynamics of what Atlantic Hardware and Plumbing does when this rebuild. Now, price surging was coming up to the hurricane threat. The hurricane happened. At this point now, we go rebuild. So let's look on how this went. Still on the recap. You had 9 months of revenue growth, right, at the time when they had done their listing. So 1.23 billion moved to 1.29. And we had profitability was weighed down by the administrative costs that they had linked to listing and warehouse upgrades. But what was the key event when they listed? The IPO proceeds were going to be used to pay down debt, which would have then de-risked their balance sheet, right? Just before, if anything happened, interest rates potentially tighten. So
the debt is not cleared in full. They still have other debts, but continue.
Fair enough. But we've had multiple IPOs before, and for those who have followed IPOs, we've always looked at it that when they've taken the money, I never really liked it in the first place because I didn't understand it. But the truth is, you take an IPO, you take the IPO's money under all of the things that the JSE gives you in coming onto the junior market, accordingly in terms of your tax break periods, etc., mentorship, all of the goodies, the niceties that should put your company on a nice, proper trajectory for growth, both quantitatively and qualitatively in terms of management. With the debt being significantly paid down, right? Just before a major hurricane has happened to this country, going into 2026 for them, quantitative side, there's a wild estimation, and I can say wild because it could genuinely happen if that's the case. But I will plant this number and see if it actually does materialize. Revenue growth doubles for 2026. And it says greater than 50% year on year. And that's because the hardware stores are typically performing. Hardware stores are typically the highest performing asset class following wind damage events due to the immediate need for roofing, plywood, plumbing repairs. Again, we come back. There's 156,000 homes that were either destroyed or impacted or destroyed. There's going to be heavy requirements to put everything back in place accordingly. So even with your container homes require outfitting as well too. It needs fixtures, etc., and so forth to be done. Unless everything come in the container, and even if everything does, not everything might work. So henceforth, at that point, there is still the ability for this being a very important small cog because they're big but not that big in comparison to their biggest not listed competitor, Hardware and Lumber. But yes, all the same being said, they go for me hand in hand like hot carb cement, not as powerful as carb cement, but they have importance. On the qualitative side, they are small enough that the hurricane demand would move their needle on their earnings significantly more than the larger competitors, their larger conglomerates. And I just mentioned Hardware Lumber. Because they have a wholesale focus. So it would allow them to supply smaller hardware stores in rural areas that have been devastated by the storms. That's just one of the qualitative aspects about it. So with the hurricane recovery strengths, we have roofing demand, with the number of roofs that were lost, zinc, lumber, nails. Oh man, like the expectation would be for a very high demand. So there's a super demand phase for those three things, zinc, lumber, and nails accordingly. And the supply demand dynamics, I've mentioned that a lot. Just that's a key part of most companies when you see price pop up. It's really simple. There's not enough supply for the demand. Very simple. Price normally goes up in a free moving market accordingly, right? So henceforth they might have a phase for 2026. So we can look to see if that does happen. Second part is their agility in terms of they're a newly listed junior market company and they do have fresh capital with reduced debt. So they have the liquidity to aggressively, and this is now based on what management will do. Let's hope management is thinking this way. Based on their liquidity, they can aggressively restock their inventory to meet the shortages that the older cash-strapped competitors can't do. So wrapping it all up, their bull case is that they will be able to leverage their new warehouse and their ERP, so that stands for their enterprise.
Yeah, their in-house system. They kind of
right, their in-house system. Right, so their ERP system would basically make sure to keep the shelves stocked properly when their competitors have problems or run dry, right? So that allows them to, and this is the hope, capture significant market share in the western side of Jamaica, basically for the rebuild, and allows their stuff to double accordingly. Bear case for them though,
Double, sir, double
as in
from
this, as
hold on,
in
hold
not
on,
the,
hold
not
on,
the.
hold on. Double from like where we are here now, 135,
All
220.
right. So hold on.
Or you
IPO
mean
was
double
one.
from
IP.
IPO price? Okay,
I
okay,
double
okay,
from IPO price.
okay,
Double from
okay,
IPO price. To be
okay,
very clear. But then
okay,
again,
okay,
yes,
okay,
yes, that is we can
okay.
wipe our brows. But the truth is, the person who compared about the $31 stuff at a dollar 45,
$35.
35, sorry, correction, thank you. At a dollar 35, what is the probability based on supply of moving that company's share price from 135 from a dollar 35 times that by two, by the way, right? So that's just a simple times by two, right? So 135 times two is going to bring them to, let me get this right, times it by two
There's so
is
many things
$2.
yeah, there are so many things I have to say about what you're saying. I get what you're talking about the nominal price issue where I guess mentally for some investors it's harder to go from 31 to 62 even though it's still 100% versus 135
Exactly.
to 70.
To $2 and 70
That,
cents.
that's one of the oldest
Tricks in the book.
yes, the old not
Yeah.
necessarily a trick, but it's one of those things that investors don't think about. It's the nominal price plays a trick on the mind that it's cheaper, just like a
Yeah.
certain stock trading at certain cents. Won't call any names, but I mean I get what you're saying. I agree with Nicola here that says Atlantic Hardware is located in Kingston, sir, not close to the west. Transport is expensive. How would that work? I'll just say I hope they use Trans Jamaica to get the stuff.
So again, to remind Nicola, hold on, that the statement was yes, they are located in Kingston. But remember what the statement was. It was that they would use their leverage to supply the smaller hardware, smaller so they could supply the smaller hardware stores
Yeah,
out
that's what it is.
in the West. Okay.
Yeah, I don't think it's an issue. I mean, they are both a retailer and a distributor from what I remember. And I mean, they have just like you transfer raw materials down to that side, just like you transfer goods, petroleum, etc., down that side. Because I mean, it's the transport is expensive, but the need is great, right? So I don't think that's an issue. If anything, it would probably it may increase some of their admin costs because I remember, for example, when RPL was growing their business, they had one quarter where the trucking costs were high because they were doing more volume, so they were paying more for trucking costs, whatever. So some of their costs may go up, but certainly their revenues will go up as well. I like them for a different reason that I will not say here. I'll give it some time. I concur, sir. I'd say. I think that I was actually projecting them to do well Q2 of 2026 before the hurricane. So I think the hurricane has kind of made it more bullish for me as well. I'm not a shareholder. I don't know if I will
Yeah,
be a
man.
shareholder. This is one of those you said you are?
No, neither am I.
Okay.
Neither am I.
So
Fair
it,
disclaimer.
it may be one of those things that just be excited. I know quite a few shareholders though, a few members for a few people that I work with are shareholders. I know they'll be happy to see this one do well. I think they
Well,
will. I think
no, continue.
Yeah, I was gonna say I'm looking for two things for them. Two things that would actually bring it to that 270 that you mentioned, actually. Again, I'm not willing to say it here right now, so I'll give it some time. But two things, if two things happen for them, I don't think it's unreasonable to see. I think they'll end the year higher than the 135. I do think that with the 2 weeks we have to go, I think the report that will come out in February will be favorable for them, which will send the price moving at a little bit in anticipation of that. I look forward to them clearing down the debt. I look forward to them making some strategic move or acquisition. That's all I'll say, right? But I don't think them being in Kingston impacts them in any way. I think that they are. I see them working in kind of in tandem with Lumber because same group of companies, right? Same thread there. And this is one of the things. Levine said it here. If they should do a dividend announcement, that would actually, if they end the year, significant amount of cash and profitability, they do a reasonable dividend announcement, right? Not no 1% or 2% yield, but if they do something attractive, that would certainly be a good trigger for price movement as well. That as well as the increased sentiment, investor interest, and of course all the things that you've said so far. So I concur with you, sir.
Well, the last part. Let me just bring it up.
Yeah, go ahead.
No,
I thought you were gonna say
Lumber was on Lumber is a what we call those now honorable mention. That would have come next. But yeah, honorable mention. Those are my three. But the bear case, though, in terms of just to make sure that what we really should look at from what Nicola has asked in terms of the concern we should really have about them is again all of this stuff. Jamaica doesn't manufacture it, so it has to come from somewhere. The bear case for them, and I have to agree with this bear case, is the bigger companies. So like your hardware and Lumber, because of them having preference, they lock in exclusive contracts, which causes a supply lockout for Atlantic. So it's that part. We just have to see how it plays out. So that is termed under a supply chain squeeze, in that as they are a smaller player, they are basically cut off by the larger distributors.
In terms of bear case, I'm more concerned about increasing admin expenses for them. And so the same, transportation costs, shipping costs, maybe finance costs, because I said their debts aren't cleared and things like that. So that, because I don't remember which company it was. Fontana grew their revenues and then made less profit than they did the period before, and because they grew
because if you're growing your expenses, right? If you're growing your expenses in line with your revenue, it mats out to zero, literally, or less.
Yeah, man. All right. NB Lee says not much, if any, demand for Lumber shares at this time. There was an initial movement for Lumber right after the hurricane, similar to when Atlantic first started moving, Caribbean first started moving, etc. But that has that can change in an instant, though. NB Lee, it can be slow now and start moving. You never know. All right. So my final one. Anything you want to add before I say mine, sir?
No.
Okay.
I'm not even gonna guess it.
So the one that I'll say is actually an old favorite of yours, sir. So Chike was the one that first told me about this company back in 2018. Can you guess the company, Chike? You first told me about this company. It never would have popped up on my radar unless you told me about it.
Wow, I can't remember.
So I'll share some secrets here. Chike was the first one to tell us about Pulse. Chike was the first one to tell us
Wow.
about AMG. Chike was the first one to tell us about, was it you or Leon that mentioned stocks like X Fund back in the day?
I
But
was an X1 fan.
I'm
I was
talking
an
about
X1 fan.
Indies. I'm talking about Indies. Indies is the third one.
Well, fair disclaimer, I
Uh-huh.
am to this day an indie shareholder.
You're still a
I've
shareholder?
been
Okay,
riding
okay,
with, yeah,
okay,
man.
okay.
I have been riding with indies.
And
My
Sterling
dividend
is one of those that,
and
that you're
sterling.
talking about as well. Yeah.
Yeah, yeah.
So I am a shareholder at the point of this video of Indies. And they've had a disappointing year. Things that didn't necessarily work out well for them, but I think it's a good opportunity. Let me go. I think they're hold on, let me find that for them. So the things that are going to be reasons why I'm watching them are still the same things that made me want to watch them at the start of this year. So they're down 30% year to date, right? That's significant. That's not something that's small. So it has. Am I in loss? I don't think so. Maybe a small loss. Maybe I'm like 5% down or something like that. I'm not sure. I have to double check. But I felt like it's more of a delay on the thing. So the partnership in the US, the growth of the business, I think the needs for generic drugs will continue to grow. I think they seem to have some issue though in terms of their relationship with, because they've alluded to challenges with government, challenges with getting, for example,
Mm-hmm.
permission to distribute, challenges. So that to me is something that they would need to work through. But and they had to refinance some debt recently as well. I think a 850 million bond that they had was refinanced. So that's fresh on their books.
Yeah, that's there.
But I like the company because what I learned from you back then, and I still see it to this day, they're very cyclical. It's one of those companies that like struggles for a little bit in terms of the stock price. It'll struggle for a good period. Let's say they have a down year like they did this year, and then next year they have like a good run. It's just one of those things that I've never seen steady and sustained growth. I think their highest price they went to was almost maybe, I think their all-time high is above $4. So they're at 250 now. So they're a ways down from their all-time high. But as I said, the new drug growth of the company, the continued expansion, partnerships, etc., I think are the things that I like about them. But the things that I don't like, and the thing that I'd be objective about, is that they just seem to have a lack of favor with working through some of the things that prevents their business from growing even further. That is concerning for me. Because all of these companies need good dialogue, good relationship with government, with legislators, with the people who are going to allow their business to thrive, right? So I don't know if it's an administration thing. I don't know if it's a contact thing. Like, I don't know, right? I never was able to go to the AGM. Usually I try to go to the AGMs for companies that I'm a shareholder for. Wasn't able to make their AGM because I think it was out of town, right?
Yeah, the AGMs are normally out of town.
Yeah, so I'll try to be there for next year, because I mean, again, I'm still optimistic. I think whatever they were expected to do is just delayed. I think it will still happen. And so I thought there would be some issue with the whole tariff and Trump and what he was saying in the US, but what they alluded to in their last report, let me find it here, in their Q4 report. I'm just gonna read the outlook here. So they mentioned, despite negative impact caused by Hurricane Melissa, leading to loss of revenue, so they were impacted there, and IT software challenges on the government platform causing delays in shipment and loss of sales. This is another government issue that this wasn't the one I was thinking about. The company maintaining consistency in its revenues a very strong signal. So they've lost revenues, they've had challenges, they've had delays, and yet they've had consistency in revenues, which means if those things were not there, they would have had a better year. Their approval of Regadenoson, I think that's called, is completing production this month, to make its entry into the US market in an upcoming fiscal year continues to be another optimistic indicator of stable and sustained growth. And then the long-awaited approvals from the planning authorities in this fiscal year for the 3-acre real asset is another important milestone. So I think, again, it's just a delayed and not denied. So I think I'll be smiling next year for multiple reasons. As I said, I'm a shareholder of the three stocks that I mentioned. This is one that I'm a shareholder of. I am going to be adding to my portfolio though in the next 4 weeks, right? So I have my plan for the stocks that I'm watching. Outside of the 3 that I mentioned, I have like 6 or 7 stocks on my watch list now. I have some that I'm planning to take sizable positions in. I'm going to do a rebalancing exercise, and assuming that the price stays where it is, I'm planning to add the ones that I have in mind should still be favorable entry. We haven't talked about West Indies Petroleum. I don't want us to end this video. I don't know if you have any thoughts on them, but I wanted to save it now. I don't want us to cover that here. So yeah, that's my 3. Any closing thoughts, or we've gone 90 minutes, I think. So guys, if you have any questions, comments, post them in the chat now. I'll go through them. Sean says, I took a margin on Indies this year, $2.75, and it paid off well. Got out at $4.80. I don't think it did $4.80 this year.
No, he said it was 3 cents. He said afterwards it was 3.75.
It did well earlier in the year for sure. But yeah, I had a higher target in mind. So
kudos to him. I mean, for me, I'm the long term, set it and forget it. Well, not necessarily forget it. But you know,
I don't think you can do that in this market, sir. You can't set it and forget it in Jamaica. We're not talking about the S&P 500 here. If you set it and forget it in Jamaica, you will likely be at a loss. Name one company apart from Trans Jamaica that has been up in the last 5 years.
Well, I can't say the particular one because you don't like them, and I am a shareholder of that one. But
Who's
anyway,
that?
Yes.
Okay, yes. I mean, so apart from that, then who else?
That's true. Actually, I don't know.
You can't set it and forget it in Jamaica.
But hold on. Whoa, hold on. Let us make sure that we tell all of our persons. There's the other part of how I do things, which is the most important part. Warren Buffett tactic. That means his name gets dropped.
Work in Jamaica.
Hold on. His name gets dropped a lot, but I'm going to show you something. Yes, it does, because there will always be rough patches. But I'll say this much: for the ones that have been solidly behind, they have still, even if they're not undersizedly. And when I say undersizedly, I like how the guys, because it always boggles my mind when they talk in the general group. You know, they're looking at, they would say something like, you know, it's a catastrophic thing going on with a company in the US. And I'm looking at it going, it's only down 7%. Like, it lost $21. That's not anything, because a stop loss in terms of where you want to get out at, and this is just a side info for those who don't know about the trading part. You set a stop loss. We don't have that function here, by the way. And JSC, if you're listening, definitely. That's an indictment that we do not have stop
Unfortunately,
losses and take profit to this day. So
I
yeah,
agree.
but
I agree.
you set a stop loss anywhere between 5 to 15%, to protect if you had gone in and you decide you don't want to lose any more cash. So most of the stuff that I have invested in for years, first and foremost, when I bought them at low valuation. That's the first thing. So for me, with respect to indies, I think I am down, but then I'm going to piggyback on what you taught me. When you max out all of the dividends, which have been consistent, by the way, year on year, 11 cents at the price that is going, even at the current price of $2.49, the dividend yield is 5%. And even better, the based on what they said had happened, they actually increased their dividend marginally,
They,
but they
they did.
still increased it. It moved
That
from
was
11 cents to 13 cents.
that was one of the things that made it a firm kind of move for me, right? Because I saw that and it was very enticing for me, sir. But yeah, but Chike, we need to do another video about this. I don't agree that Warren Buffett's approach of investing works in Jamaica. I think so. I think there's a fundamental issue with how people learn investing in Jamaica. We start to learn investing. We look in Jamaica. We may not have an abundance of resources. I know we're one. I know Kalila is one. I know you have persons like, for example, I think Randy does classes. We had Stocks on the Rocks. We have the Jamaican investor. We have Demetrius. We have Limitless. So actually, now that I'm listing it, persons have options, but they may not be aware of all the options. Let me say it that way. And so naturally, persons want to consume information. They look to the US. I think the US teaches you
It's a mature market.
skews the way that you learn how to invest in Jamaica. This is a big issue, I think, because people will see things from persons who I follow, who I watch, content from, like a Brian Ferraldi, who will say things like, just hold on to your winners and don't do this, don't do, like, I think his advice works. Always look at the
In a mature market.
The context of the advice is important. The context of the education is important. You can't take investing guidance or teaching in one market and apply it to every market. There's nuance to every market. There are circumstances that may be like exceptions to whatever rule of investing that exists. And I think that's why persons, for example, when they've started investing, they get, frustrated because they're doing all the things. They're dollar cost averaging, they're buying and holding, they're buying the dip, they're doing all the things that people tell you to do.
And they keep going down.
Exactly. So it drives me crazy to see that. And I said I would do a video about it because of how much the level, the disparity of information that we consume. When I just started learning investing, Chike, I was consuming 90% of information in the US.
On the US market. We both were, because when we started there.
I'm trying to apply that information to a Jamaican context, and it was not working. So I think we need to learn. So there are things that are similar, though, that people underestimate. For example, it took me a long while to appreciate things like sentiment and how investors feel and how investors respond. And because for a long while, there was a segment of the market who, for example, was critical of things like sentiment and saying people investing off vibes and things like that. That is more of a reality in our market. That is more of a driving factor in our market, along with other things, right? So there are similar things for sure, but I think if you consume US-based content and you try to invest in Jamaica with that, you will lose money in my opinion. So I say to persons as well, the conditions that existed for Warren Buffett to make the money that he made no longer exists. Majority of his wealth is already been made. So by the time we learned about him, he's made maybe 90% of his money. So
Sure.
I saw something that said in the last 10 years to 15 years, he has not been as successful as the first maybe 40 years that he was investing for. So his success rate isn't the same, right? Because remember, we also have to think about the fact that things kind of went into a certain level of maturity in the US markets. The US markets are pretty much at some ridiculous all-time highs because of various factors like the stimulus, etc. So that market is like everything is overpriced in the US market. Everything is overvalued. So even by their own standards of what you should be investing fundamentally, there's nothing that's actually trading within fair value either, because it's, you know what, I'm gonna stop ranting. But just, I really have a problem with when persons try to apply US lessons to our market, because our market is, I think, still in a very early stage. But we do have, I think we have a pocket of very smart investors, intentional investors. Then we have a wide section of persons who don't necessarily know what they're doing. And then you have a bunch of persons who are inactive, who do not invest because maybe they bought an IPO and that is just sitting in their account. Maybe they bought some unit trust or whatever. Yeah. So I think, and that's why we're trying to, for example, bridge the gap between those persons who are investing with intelligence and bridging that gap so that more persons can invest that way. And I think the answer to most of what we're going through is that same maturity thing, where smarter investors, more experienced investors, more strategic investors, and then everybody wins. The companies have to come better because investors aren't just going to accept any offer that comes through the market. Investors hold companies accountable when they do foolishness in terms of their reports and their reporting and their disclosures and all that stuff. And then JSC holds up their side by enforcing the rules, putting in the systems and things for us to have a more responsive market, a more fluid market, a smoother market. So yeah, like, I'm very sorry, guys, that was not planned. But I mean, Chike and I have been having this conversation for years about his preferred style of investing, and I've always thought that it's not. I didn't see how it would work for me. It has never worked for me. And so certainly, I don't see what has changed there for sure, right? But final words, sir. Let me give you a chance to speak. I've been, ranting for a while.
Well, I just want to thank, what is this, 124 people that I'm seeing that joined in on the last. So guys, listen to the two of us go off on that. Thank you very much.
I've been asking for Chike. Somebody messaged me the other day and saying I'd love to say Chike. I reached out to Andre as well, Andre Thompson. He says he can join us for January. So we're gonna bring back some OGs.
Nice big one. Round table talk. That'll be nice.
Yeah.
But final closing stuff is, I mean, as we gear up for the Christmas season, it's a time it's a time for family, but more importantly, it's a time for giving. So, we all have to remember, as we put in, especially if you've made some sizable returns, spare in terms of giving a little bit to those who are definitely currently in need, and without at this point in time. So that would be my, as we talk about biblical principles here on Learn, Grow, Invest. It is for you to give as you do receive, and you will be blessed. Even more abundantly as you give. So definitely, look out for your neighbor, for your brother. Be their keeper accordingly. Help where you can. It doesn't even have to be money either. Your time, and effort is also good enough, because this is not, as we put out these companies, and as I said, I stuck with the team of the recovery. I have seen where doing this is not overnight. This is gonna take years, and we just need to all come together. We who have need to do our best to supply to those who do not have, so that everybody can get back on the same level again and be restored to the dignity that they have, so that they had before. So yeah, that's my closing in terms of, what I'd say, and wish everyone here that's on the call um a very great holiday as it comes up, with family, love, and joy together.
All right, thank you very much, sir. I agree as well. I will see you again soon for sure. We will. I'll share this with you because maybe you'd be interested in this. I'll be issuing a challenge at the start of the year. I'm going to share it with you when it is public. I'll tell you about it privately, but
Mhm.
I have an idea for a series that I think will be interesting. So I'm going to issue a challenge in January. It'll be with the intent of getting persons to invest every single month throughout the year. It will be just on YouTube. So I'll tell you about it. We'll share it in January, and then we kind of see if we can keep it going throughout the year. But I'm issuing a challenge now. I'll frame it a little bit more when the episode releases. But I'm challenging everybody who is on the call now, who's on this stream now, checking us out, to make a plan to invest every single month, whether you earn an income, whether you have your own business, you're gonna add something consistently to your investment account every month next year. I'll tell you what the challenge is at the start of the year, but just have that mindset from now, that whatever the amount is, you're gonna add to that consistently every month for next year. And Chike, I'm issuing that challenge to you as well, so you can think about what the
Yeah, no, I'm
amount.
sorry about that. So yeah, I'll take that challenge. Yeah.
Yeah, man, think about what the amount will be. It's more about the idea though that really want to get more people investing. I think that it's something that, as we think about, as you said, being more generous, helping others. I had a number of persons who reached out to me right after the hurricane happened, and they said that they were able to, for example, donate their dividend checks, and that to me was such a big win.
Nice.
It really
Nice.
it felt amazing to me that I was able to help somebody learn to invest, make money investing, and then they could now take money that they would not have had to donate, right? I think one person donated as much as $500,000 just from the money that they made investing, right? That money that would not have been there before if they did not have this skill. And so that's why, for example, I would just encourage persons to share our channel, share the level 1 course, because the more people invest, the better options we have, the more wealth we'll have as a country, and the more we'll be able to do good to others. All right. All right. I think this is for you, Chike, before you go. That's why Buffett sits on $381 billion in cash, $381 billion in cash, everything overvalued in the state. What you guys think did drive the bull run from 2015 to 2020? The most important factor, as in Jamaica, John Phillips, what drove the bull run here? I don't know. I haven't really thought about it. I didn't start investing till 2017, so I wasn't there the first time when we had the best performing market. I can tell you what I think drove it between maybe 2017 to 2019, 2020. I think marketing was played a big role. I think it became sexy to invest. I think the appearance of platforms like Kalila, platforms like ours started to, persons had more outlet to learn something that was interesting. The companies certainly were doing well, so that was also appealing. Because I remember a time, Cheek, and you and I had this conversation back then. You could literally put some
Throw
news
darts at the dartboard
or throw
and
a
just
dart.
pick it out a grab bag. Yeah,
Exactly.
grab bag. This was grab bag. It was going on crazy.
It was certainly, I think, just it was a time of exuberance, right? So if you remember
You
that
had
same
to, you had to be there.
fear greed index that we used to look at, there was a lot of just enthusiasm. If COVID did not happen, I think that bull run would have continued for us.
Yeah, that's true.
And so for me, I've always said, once the economy recovers, once the financial sector recovers, that's a signal to me for the bull run. I think the financial sector is going to be extremely interesting next year. So if there's some consolidation, then I think you'll make the space interesting. I think some banks, you know what, I don't want to start
Let's not. Let's not go with that one. There's so much to touch on that.
Yeah, man. But thank you, sir. I appreciate it. All the best to you and yours, sir. And I'll see you again. Yeah, man.
All right. Take care, everyone. Bye.
All right, guys. I see Megan Linda saying, I don't like the returns I'm getting from my unit trust investment. What is a good alternative? Megan, please sign up for a level 1 course. Please, 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 please. Learn, Grow, Invest. Can you get Clive Charlton on your program? I have no problem reaching out to him, but we don't do sponsored videos anymore. It's just not on our radar. We're not interested in it. We haven't had any conversations about it. So it certainly couldn't be representing JMMB. So JMMB, as you notice, kind of does their own thing now. So I don't know. If somebody has his contact, I'll reach out to him. And Clive Charlton, the individual, he's more than welcome to join, but it can't be a Clive from JMMB kind of thing. It would have to be the individual. So if somebody has his contact and he's interested, for sure, he's welcome. I think I answered those already. Someone saying, nice to see you back on the screen, Chike. A person saying that they agree with me. So this person, Trevor, lives in the US and only listens to me and others in the space. I will say this, guys. I think it's important. I've said this earlier in the stream. I mean it. If any of you like investing, want to talk about investing, want to start a platform about investing, you have my support, right? Because I want to see more persons in the space. There's content that I don't do. There are things that I don't talk about. There are things that I don't cover. And a part of the signal of a mature market is an abundance of information about something. Right now, it's dominated by, Kalila is clearly the leader. I think that we're second in terms of maybe scope of audience and maybe volume of content, etc. And then you have persons who have their kind of like niches or groups that are there. But I think that we need, I'd love to see the number of persons in the space double. I'd love to see more opportunities. If you look on YouTube, you'll see persons who talk about maybe personal finance for a video. Maybe they talk about investing, but they don't do consistent content. But I'd love to see more of that. All right. The current climate is really rough for new investors. Trump is creating a lot of instability. Natural disasters are getting frequent. Wars happening left and right. Investing now is tough, but it's still absolutely necessary. With all the things that you just mentioned, which are 100% true, to me, investing is no longer optional. Because what we didn't get to talk about, the rate of inflation, I believe, is going to be so massive next year. We're already seeing posts about the prices of certain things. Next year, I think it's going to be a very expensive year, right? Very expensive. So I think that, again, to me, investing is a way that you beat inflation, right? But yeah, so I do want to say some other things here. I'm going to take one more break and then we're going to kind of wrap up, all right? You've always heard that you need to invest, but you don't know where to begin.
Don't worry, leave that to us. We've been teaching people how to invest for the last 8 years and have helped over 45,000 people get started with investing in a simple way. And now we've made the process even easier by creating a course that teaches you how to get started investing in 5 simple steps. And it's called our L.E.A.R.N method.
Before you invest, you need to 1, look at your financial position, 2, establish your personal goals, 3, assess your investment options, 4, research the best options for you, and 5, normalize investing regularly.
With these 5 easy steps, you can start your investment journey with confidence and clarity. But wait, there's more. We've created templates and resources to help you take action right away. After this course, you will know how much you have to invest, your investment targets and timelines, and how to invest to achieve your goals. Register now at learngrowinvestclub.com.
All right, so that was a course that I was mentioning to Megan. Sign up for that course. It's completely free. You can take that course, learn how to invest, learn why your unit trust may not be performing the way that you expect it to, and be able to make some better decisions. All right. So let me see if I can gather my thoughts here so I can wrap up properly. So we have, we're still taking persons for our level 2 program. So level 2 is 20% off until January 4th. So if you go to our website, you can use code LVL220. We posted it on our social media earlier. So let me find that here. So for persons who want to learn how to invest, level 2 program is what you need to check out. So our level 1 is a free program. Our level 2 is our paid program that you can pay for monthly or annually. If you pay for the entire year from now, you save 20%. And the regular cost is $50 per month, maybe about 8,000 Jamaican dollars. I think that's a more than reasonable amount to learn how to invest. You'll have access to our monthly calls. You'll have access to some pre-recorded videos that will show you things like, for example, how to do research or how to read a financial statement, things like that. And then we'll have live conversations now where we work through things with you, teach you how to do things like when to buy, when to sell, how to do things like take profit from stocks and things like that. A number of persons have signed up for the whole year already. This is the most signups we've had before the start of a cohort. This was formerly our investment challenge. We've renamed it to level 2 and kind of revamped the program, kind of stripped out the parts that I think weren't as impactful, because we had the challenge for 2 years. So we took the best of what we had for the last 2 years and put it into a 1-year program. So we're going to be doing it in cohorts each year now. So we have 35 persons who've signed up for the year already, which is awesome. We've never had so many people sign up at once. That was for our Black Friday special. We usually try to accommodate 100 persons, so there are 65 spaces left, which I can tell you, usually more persons sign up closer to the start of the year. And so I'm expecting we may start the year with 50 persons or more, which means we won't have as many spaces as we did for this year. So if you're interested, sign up now. And then you'll be able to just understand what we're talking about here, and things that will help you be able to progress as an investor. Right? So that's the main thing I wanted to announce. As a company, we're going to be signing off this Friday. This is our kind of out of office. It's family time, as you heard Chike mention. I work 2 jobs now. So content lead, community lead, coach for LGI, but I also work at Sagicor full-time in data and analytics. And so I need that break, but you'll see a ton of videos from us over the next 2 weeks. I'm going to be recording some stuff. I'm going to actually do a video tomorrow. I had one scheduled for 10 o'clock tonight that I'll move to tomorrow. I'm going to try and do 2 videos tomorrow because I had another one planned for tonight, but when Sheikha and I get together, we can't, it can't be 1 hour, right? So we went a little over, and I have a video that I want to do. Well, a couple of them. I have about 5 or 6 videos that are scheduled. Those will be kind of the ones that I can do live, I'll do live. The rest will be pre-recorded and posted. So you'll have a lot of things to catch up on with us for the next 2 weeks, but we won't be doing any live sessions after this Friday because we're just going to be signing off to just kind of regroup for the year, and then we'll be ready and roaring for level 2 and level 3 in January. And of course, we'll be our level 1 course is already done. We may update some modules from time to time, but that one is going to be one that we introduce to new investors. And yeah, that's it really. So Jason is asking how to sign up for level 2, Jason, or level 1. Let me know. So level 1, you sign up with the link in the description. Well, either one, you can sign up on our website, learngrowinvestclub.com. Go to any one of our social media, including YouTube. Go to our profile. You'll see the links there, and you can sign up that way. Or just go to our website and you can sign up. So level 2 is what I recommend if you're not a brand new investor, but let's say you don't have a clear process or a strategy for research. You don't know, for example, when to buy, when to sell stocks. You may be holding some stocks, you're not sure what to do about them, that kind of thing. We'll teach you that in level 2 and so on, right? Let me take some final comments here. So Levain says persons are going to be seeking cash flow. I think that will always be true, well, at least for the foreseeable future. I remember an interview with Marlene Street Forest and Kalila where she said she expects the market would come back. No comment on that one. Not getting better than what you're seeing now because the globalists has their agendas. I disagree. I think we'll see a recovery soon. Khalifa doesn't have these kind of discussions. I think you mean Kalila, because when you say Khalifa, I thought you're like, whiz Khalifa? One of the things I remember from 10 years ago, which was pivotal to the bull run, was the introduction of JTrader. Interesting. That was before my time. I started investing 8 years ago. It gave more access to trading as opposed to, that could be it for sure. Or one of the drivers for sure. Can't wait for the dip to stop dipping, because when it does, the people that held out for this song will be greatly rewarded. Listen, when the dip stops dipping, there'll be people who have to recover. Like their stock will have to probably grow 100 or more % for them to break even. Right? Just think about that. If your stock is down 70% right now, let's say a stock was $100 and now it's $30. That stock would go up 233% for you to break even back to that $100. Right? Think about that. Right? The video is here, sir. The receipts are here. All right. So thank you guys for being here. Look out for that video tomorrow. Subscribe if you haven't done so already. Like the video, please. 106 persons and we only have 50 likes. Guys, don't be stingy with the likes, please. It's free to like the video. We're not going to send you a bill to like the video. Thanks in advance. All right. That is a hard reality to bite, but it's a hard truth. What are you talking about here? Send me that, Nicholas. I'm signing off now. All right. Take care, everyone.
Does this sound like you? You bought into that IPO they told you was a good investment, and now you're down 20, 30, maybe even 40%. You try to buy the stocks they talk about in groups or on social media.
You've even taken a chance on the ones your advisor sends you via email.
But after 2 years, that IPO, that stock is still down.
There's a clear difference between investing and making a good investment decision. So if you're stuck, What you need to do is learn how to invest the right way.
In our L.E.A.R.N Level 2 program, we teach you how to build a $1 million investment portfolio. To make money investing, you need to know which stocks are right for your investment strategy, know when is the right time to buy and sell, and know how to build the right portfolio for your investment style. This program will help you invest meaningfully while making money. When you sign up, you'll get monthly guidance on how to invest and make money while doing it. You'll have a community of investors on the same journey as you to support you, and you'll have resources to help you stay on track. Join our 2026 cohort so you can get back on track with your financial goals.